Everyone in the financial world, and frankly, anyone paying even a little bit of attention to the market is just laser focused on one company.
Oh, absolutely. NVDA.
Exactly.
Yeah.
It's the undisputed champion of the AI revolution.
Yeah.
It's the engine, right? It builds the hardware that powers everything.
That has been the universal truth for the last few years. NVIDIA's run, its dominance, it's been historic, no question.
But, and this is a big boat, if you're only focused on the engine, you might be missing the actual vehicle. And maybe more importantly, the driver.
The intelligence, the core intelligence that the hardware is actually running.
Yes. And that driver, the real brains behind this generative AI explosion, well, it's not something you can just go and buy on the public markets.
Not easily, anyway.
And that's why we're doing this deep dive for you today. We've been digging into this specific analysis report that presents a really fascinating kind of contrarian view.
The idea that the ultimate AI play isn't NVIDIA at all.
It's this unique vehicle called Destiny Tech 100, or DXYZ.
Right. So our mission today is to really unpack this analysis, which argues that DXYZ is this one-of-a-kind route to owning a literal piece of the Sam Altman OpenAI empire.
So if you're curious about getting access to some of the world's most valuable and, let's be honest, most tightly guarded tech companies before they go public, this is for you.
The central question we have to tackle is DXYZ really this ultimate AI play for the next few years?
Or is the wild volatility and the huge premium you have to pay, is that just too high a price for admission? Okay, let's unpack this.
I think we have to start with the current reality, what the report calls the problem with public AI.
Which is NVIDIA. Even though it's been incredible, the analysis points out that the NVDA trade is now just deeply crowded.
And that's a crucial point. When a stock gets that big, that successful, and everyone knows it's the top dog, a couple of things happen.
Okay.
First, its future returns, they depend almost entirely on the entire AI market just continuing to expand at this crazy rate.
Yeah.
It's not about its valuation catching up anymore.
The easy money's been made, so to speak.
In a way, yes. And second, the alpha, that really outsized explosive return, it starts to shrink because the trade is just saturated. Everyone already owns the shovels in the gold rush.
So the analysis argues that if you want that real alpha, you have to look where the public can't go.
Exactly. You have to go to the private markets, specifically the world of the unicorns.
And what's wild is how long these companies are staying private now. We're talking about giants valued at, tens, even hundreds of billions of dollars.
Companies like SpaceX, Stripe, and of course the one everyone's talking about in AI, OpenAI.
And getting into those companies has historically been a complete non-starter for the average person. You were just locked out.
Completely. The barrier was immense. The analysis really highlights this. It wasn't just about having, a big brokerage account.
It was about connections.
It was about venture capital connections, specialized knowledge, and capital in the 8-figure range. We're talking $10 million or more just to get a seat at the table.
So for years, most people just had to watch from the sidelines while these companies exploded in value, and you could only get in after the IPO.
Right, at which point a huge chunk of that massive early growth had already been captured by the insiders.
And this exclusion is the whole context here.
It is. This inability for the public to access that early stage alpha is the exact problem that DXYZ is, according to this report, designed to solve.
Okay, so that brings us to the structure itself.
Mm-hmm.
Because a lot of people see the ticker DXYZ and just assume it's another tech stock.
But it's very different.
How so?
Well, Destiny Tech 100 isn't a typical company with operations and products. The analysis describes it more like a specialized portfolio, almost like a VIP club for private assets.
So it's a fund?
Essentially, yes. It's a type of closed-end fund that holds equity stakes in this highly curated list of top venture-backed private tech companies.
So when you buy a share of DXYZ,
you're essentially buying a fractional, tradable slice of this entire exclusive portfolio.
That makes sense. It's basically bundling that exclusivity into a package you can buy on the stock market. And the portfolio snapshot it's a wish list.
It is a who's who of the companies that people expect to dominate the next decade. But for the AI bulls, who this analysis is really targeting, the report is crystal clear about the number one attraction.
The reason you'd buy this over anything else.
Yes. The element that makes this a contrarian NVDA trade.
And that, of course, is the exposure to OpenAI. This is where it gets really interesting, because the entire report is built on this fundamental thesis shift.
It's all about the dividing line between hardware and intelligence.
Explain that.
Well, if we connect this to the bigger picture, the report argues we have to stop confusing the tool with the product. The chips, NVIDIA's chips, are the hardware play. They are the essential shovels in the gold rush.
But they're still just shovels.
Exactly. OpenAI, through its models and its push toward AGI, they own the intelligence. They're not selling the shovels, they're creating the gold itself.
I see the power in that analogy, but let me play devil's advocate for a second.
Go for it.
We've seen massive hype cycles before. Isn't the risk here that DXYZ is basically just a highly speculative proxy trade on a single thesis? If OpenAI stumbles, or if Google or Meta or someone else gets to AGI first?
Does the whole thing crumble?
Yeah, does the whole stock just collapse, regardless of what else is in the portfolio?
That is a critical question, and the analysis addresses it by really emphasizing OpenAI's current technological lead and its ecosystem, cemented by that Microsoft partnership and Sam Altman's vision.
It's not just ChatGPT.
No, we're way beyond that now.
Yeah.
They're talking about the growth tied to foundational tech like Sora, their video model, and the huge long-term potential of achieving real artificial general intelligence.
So the bull case isn't just about the next product update, it's about a massive technological leap. And the key is getting access to that value before an IPO.
That's the whole ballgame. That pre-IPO opportunity is what drives the entire valuation thesis. The analysis uses this really powerful analogy.
The Facebook and Google one.
Right. It says, imagine getting into Facebook or Google, not when they IPO'd, but way back when they were still private, venture-backed companies. We know how much wealth was created for those early insiders.
Astronomical amounts.
So the premium, which we're going to talk about, isn't just about the current value of the assets. It's the price of a seat at the table to capture that explosive early growth phase before the rest of the world gets invited in.
You're buying access to a potential future giant long before it has to deal with quarterly earnings calls and all the short-term pressure of the public markets.
Exactly. The focus is purely on capturing the value created by a technological jump.
Okay, so let's shift gears and talk about the price action around this golden ticket, because that access definitely comes at a price.
It does. The analysis gave a very specific market snapshot. DXYZ was trading around $30.63.
And on December 31st, it closed down nearly 3%.
It did. And the movement that day was really telling. The report noted a sharp sell-off right at the opening bell.
But then it recovered.
It clawed its way back and then stabilized, holding pretty firm in that $30 range for the rest of the day. And that kind of intraday swing is pretty typical for a stock with this much volatility and demand.
The analysis calls it noise.
Right, just immediate post-listing noise.
But that volatility is a huge challenge for an investor. It shows the excitement, but also the massive risk. So how should you interpret a sudden dip like that?
Well, according to the bull case in the analysis, that volatility is actually seen as the stock cooling off after some of its earlier crazy moves.
A buying opportunity.
If you believe the long-term thesis, yes. It's presented as a potential entry point, a classic buy-the-dip invitation for those who can stomach it.
Okay, but let's get into the weeds on risk, because this is where the skeptical part of the conversation has to happen. The report flags a huge structural risk factor.
The premium.
Yes. DXYZ trades way, way higher than the actual cash value of the companies inside it. How do you justify paying, say, $30 for something that might only be intrinsically worth $15?
That gap is the absolute core of the risk discussion. It's the premium over net asset value, or NAV.
And NAV is just what the underlying stakes in the private companies are currently worth.
Correct. But here's the catch. Calculating that NAV for private companies is really tricky.
Walk us through that, because it's totally opaque to the public. How do they even come up with the NAV when these companies aren't traded?
The report explains that the valuations are typically based on the last external funding round. So if OpenAI raised money in April at a $100 billion valuation, that figure becomes the basis for the NAV calculation.
Until the next funding round.
Exactly, which might only happen once a year or even less frequently.
So the premium isn't just for scarcity. We're also betting that those valuations aren't already out of date. That's fascinating.
Precisely, because the demand for access to these specific companies, especially OpenAI and SpaceX, is so incredibly intense, investors are willing to pay that huge premium.
You're paying for scarcity, and you're also paying for the fund's expertise in getting these deals.
That's the other part of it, yes. You're paying for the management's ability to get you into these rounds in the first place.
And since DXYZ operates like a fund, that implies another cost that's baked into this premium management fees.
Absolutely. That is a key difference from just buying shares of NVDA. The analysis confirms, like any closed-end fund, DXYZ has management fees, and those are part of the operational cost embedded in the price.
So you have to believe the long-term growth will outweigh not just the huge premium you paid up front, but also the ongoing cost of management.
That's a perfect summary of the risk profile. So if you're buying DXYZ, you're not just making one bet on OpenAI, you're making 3 simultaneous bets.
Okay, what are they?
1, that the companies will grow exponentially. 2, that the premium people are willing to pay for access won't shrink. And 3, that the private valuations used for the NAV aren't already inflated or about to be revised downwards.
It's an investment in future potential and scarcity, not in current value.
And we also have to mention the liquidity risk. If these private companies don't live up to the hype, or if another easier way to own them comes along, like a direct listing by OpenAI,
that scarcity premium could just vanish.
it could evaporate very, very quickly, and that would really punish investors who bought in near that $30 range.
So what does this all mean for you, the listener, trying to make sense of this very aggressive piece of research? The analysis really suggests two clear paths.
And it's based entirely on your tolerance for risk.
For the conservative investor,
The advice is clear. Stick to broad-based ETFs, like the S&P 500. DXYZ is built for maximal risk and maximal reward. It is not a capital preservation vehicle. The volatility is real.
But you fit that bold profile. If you're the investor who truly believes that OpenAI and SpaceX will be the biggest companies on Earth in 10 years,
And you are actively looking for that next explosive generational return,
then DXYZ is pitched as your ticket in. It's the legal way to bypass that $10 million minimum and the VC connections.
And the final provocative thought in the source material really frames the entire debate perfectly.
I thought so too.
It encourages you to ask yourself, what is the price of admission worth to own SpaceX and OpenAI?
It completely reframes the value equation. It makes the premium feel less like a penalty for overpaying and more like a ticket price.
A ticket price for access to potential future dominance. It turns the stock from a simple trade into a kind of historical investment.
You're buying a claim on the future.
You are essentially paying for access to future history. The moment AGI becomes real, or when commercial space travel really takes off.
And that leaves us with one final thought for you to explore on your own.
Is paying a huge premium for access to this potential future dominance through DXYZ fundamentally different from paying a premium for NVIDIA's proven current dominance?
That's a great question. Both require a deep faith in exponential growth.
But one is a bet on the intelligence of tomorrow, and the other is based on the hardware that's proven today. Something for you to mull over.